Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a daily chart. So it's coming back to 209 in here, and just pointing out that we've got this trend line through here. So we'd be looking at some sort of support in the near future, and possibly now, and probably deliver a short-term bounce within this. So there is plenty of wave counts out there for this to simply break through here and continue down. After a sort of a reaction here, we'd expect some sort of reaction at this particular point here. We've got a wave count in here that's slightly different, because this particular wave structure here is in three waves, as clearly seen here. So we would consider this a possible B wave here, and this an A wave here. So an A wave, a B wave, and looking for 5 waves down here as a C wave, and once complete, then a push up from there. But either way that we look at this, we should see a short-term bounce within this area here, and that's what we're sort of going to focus on through here. On the on our S&P 500 charts, I just wanted to draw your attention to the bigger picture there. So essentially, looking at the top of the market at the S&P 500 here, we've labelled it as the top of a third wave, with an A wave down to here, a little A, B, and C down to here, and then an A and a B and a C for a B wave orthodox top here, and then also looking for 5 waves down through here for the C wave. Yep, so this is a daily chart here. We've moved through this here. Our target point in here was around the 61.8% here, which was around the 1250 here. So bringing this wave 3 and 4 into here and wave 5 to here, we've moved along a little bit, and the wave in the 4-hour chart here, the wave 3 and the 4 here, has been unfolding there, and that was the retest back to 1300 that we're looking for there, and then we're looking for that 5 waves down through here. Well, this 5 waves down through here, we're wondering if that's actually complete now. So when we have a look at the chart here, this was the retest back here for little wave 4, and we're looking for wave 5 to come down through here. So I'm just sort of bringing you into the picture here, so you've got a big picture and breaking it down through here. So we're looking at basically down for 1, back for 2, 5 waves down for the third wave here, little A, B, and a C for the fourth, and the 5th wave may be completed at this point here. So this could possibly be the low. That's what I'm pointing out through here. So that said and done, that's fine. Now, as using Elliot's fine, it can be really accurate or it can be way off. So, but anyway, that's the story there. So what's important with the S&P 500 is this little number here, this 1272 here. Yeah, this has always been our target, the 1250 here. It didn't quite get there. It doesn't really matter. It was a long time ago we had that target. So if we find, like with the Dow Jones trend line that I just showed you, we're looking for support, and which is going to obviously give a short-term bounce. But obviously we're not seeing that yet. There's a lot of problems out there and a lot of negativity. But we need to bring these support areas in and these wave counts in, so we can be prepared for any move, so forth. So what we've been looking at here is the 1272 here. So look, if the 1272 became support, that means it would have to push up through here, probably hit that, come back and test it and find support here, and then move up from there. Then we've actually got something to the upside, haven't we? Okay, now on the Dow Jones, this would be, we could use the 12,000 through here, yeah, as the same sort of picture here. Yesterday we figured that there would be a retest of the 12 here before we seen any sort of further downside. That move up there appears to be corrective. This appears to be impulse. So the bottom line is that yes, we are under the 12,000. That does put the picture as a weak scenario. However, that trend line that I mentioned is still there, haunting the situation. So we even may see a move down to the 11.8 before we see a move back up. But as it goes, this particular wave structure here is sort of complete. And we'll see how we go from there. But this looks a corrective wave up, not an impulse wave up. Just the way that the overlapping structures are there, and this looks more of an impulse to the downside, meaning that that a bear market continuing down here. So in terms of actually trading, if the 11.9 here became the resistance, then under there, then you can trade short with using subgroup 2 here as triggers to go south. Especially if the 872 becomes the resistance there. So all that said and done, I can move on a little bit now to the other markets. Just let me get a little bit organized here, and we'll start with the FTSE next here. It's been a really nice wave structure down for the FTSE here. In coming down through here, it's a very clear structure, and what we'll be looking for here is a corrective move, a pattern. So we've got 5 waves down, so we'll be looking at an A and a B and a C wave back to the 5.7 here. If that fails there, then we can use the trigger at 672 there to add to shorts there. If this breaks to the downside from here, then we can short it from taking out that low there. With this move up through here, we would be, if it was going to move up through there, then we'd be looking for 5 waves up. So we'd be looking for, I have to break that down, it's on a 5-minute as it is, but a 2-minute chart. But looking for 5 waves there, an A, B, C, and then a 3rd wave up, then a 4th wave and a 5th wave, pretty much sort of coming into this sort of area here and failing from there. So if it fails from there, then well, depending on how you trade, what time frames and what rules you got, but certainly coming back under here and locking under here would be the bearish picture for that scenario there. The ASX 200, I'll come back to that. I just want to go into the futures market here. That's the just want to hone in on the actual contract. That's the continuation here. So this is the actual contract here for this market, and I just wanted to run through this with you a little bit in a bit more detail here, because I know people trade this. So the way I was sort of looking at it is 2 ways in terms of down for wave 1 and back for wave 2, then looking for wave 3 down, which would be something with wave 1 and a wave 2, a wave 3, a wave 4, and 5 waves down here for wave 3, and we're looking for wave 4. Here's a retest coming back up to 4.5, and then down to this point here as well. But I'm a bit, that's I don't know if this is the case here, where this is the 3rd wave, excuse me, this is the 4th wave here, and this would be the 5th wave here. I don't know if that's the scenario. It certainly could be as well. I just can't get enough detail out of here to give you a clear answer within that. Yes, I can see 5 waves in this little section here where I go 1, 2, 3, 4, 5. That's fine. That's got the right look and feel about it. However, we need to see, this is not enough detail in here nor here, but this can be an A and a B and a C back up to here, failing from this point, and then coming down to make the 5th wave here, and then going up. So look, it's choppy here. I'd be very careful about going long. if you're above the 72 and you've got support, sure, trade up close to the 4-5 there and get out. If this becomes support, fine, get in and go long from that point there and scale in subgroup 1, which would be 10, 20 and 30. And especially if 30 became support, then we'll trade long from that point there. So just pointing out that it's going, just two possible counts here, and you can get a little bit tricky there. Okay. Yeah, futures markets. Okay, we're on oil here. Still looking at oil to go to the downside, and you can see that's 95 here, which is the midpoint between the 90 and the 100. It's a minor trading level. The minor trading levels would be, the medium level is the 90. The minor trading levels are 10, 20 and 30. I haven't got them organized there properly. They keep moving. So 10, 20 and 30 is group 1. Midpoint here at the 5 minor trading level, and then 98 here as a minor trading level as well. We can see this is the previous lows through here. So, you know, it's just doing its normal struggle through here. So we may see a push down and then a push back up and then down again as well. But as I mentioned before, that coming into 93, 92 and 91 here is going to be a choppy little journey, and so will the 90 as well, but we're expecting it to come further down. Okay, the gold market, like I've been mentioning, we don't have a clear direction on this. Don't worry about all this wave count through here. We don't have a clear direction on this just yet, but we can see that, look, if the 1530 became support, then we can look at going to the upside. If it breaks the 1520, then we can go to the downside. So in here is the range of risk. So anywhere in here, you'd be getting yourself into a danger point here. You can break it further down than that now too. You can also use the 25 in here. So instead of using the 20, you can use the 25 here as a resistance to go short at that point, and you can break that down even further there as well. So we'll just see how we go with that. But this does appear, this, because of the overlapping wave structures, it appears corrective. And what I mean by overlapping is that this low here takes out the previous high, as does this one here to this one here, and this one to this one. But in saying that, this move across here also looks bullish corrective as well. So a break to the upside here is also likely as well. So yeah, I can't really sort of say much or do much in here. If stock is going to rally, then this will push up through the upside there. And if you are short within this range here, then you best keep stops above these previous highs here, because this pattern's telling me it's going up. This pattern telling me it's corrective, and it should be going down. So still a lot of confusion there, but like we've been saying all through this period here, we need to work out which one of these is going to be bullish and bearish. So a breaking of the 1520 here or the 1525 as resistance, retested resistance, not just spiking through it, but going back up and retesting it and failing at that point there. But on the early bird, I've got this as a bearish count, but on closer inspection of actually this structure through here, this is a bullish count. So don't pay any attention to what I wrote about gold in that. It's a bit risky to actually short it from here, but now looking at this pattern here. Okay, copper. As you know, I'd been looking at this as a bullish count, and basically the reason for that is there is a bigger bearish count, but I'm just going with the internal structure here, and we've got a bullish count in play here until proven otherwise. And quite simply is that we've got an A wave, a B wave and a C wave. Now we've talked about that and the internal structures there, and then we'd seen this move up through here, which is a 5-wave structure, which I've just labeled as wave 1. Yep. And yesterday we were looking at pointing out that a 61.8 retracement level would be 407, say 72, and if we found a breaking of 405, then we could look at being a bearish scenario. Basically, the 105 is held in here, and being above, excuse me, being above 400 here, medium level, we're on the strong side here. So the way that I see it is that, yes, that's the wave 2 there, and I'm quite happy with that being a wave 2, by the way, because you can see that from this structure moving down here, it's basically a nice ABC pattern, a 3-wave structure, basically an A and a B and a C wave, and the C waves are normally in 5. We've got 1, 2, 3, 4, and 5. So that's good enough for a wave 2 there. Okay, so let's see how we build from here. So we should see 5 waves, 3 waves, 5 waves pushing up through there. So it's actually delivering a bit of strength in here. So even though that a lot of the markets are bearish, bear in mind that our Australian dollar is related to this, and so is our materials sector. So, you know, as bearish as everything is, we've got this little pattern here that's telling us that there is a bullish scenario there, and we're looking at that trend line on the Dow Jones there being a bounce, and our wave count that we just went through on the S&P 500. So yeah, bit of bullish scenario there. Now on the Forex, I just want to start off with the US dollar, and it doesn't matter if you don't trade Forex, but it's still good to bring the currencies into the mix, because our currency is a commodity dollar, and it's a bit like the CAD always doing the opposite to the oil market, so that can be sort of helpful as well. I don't do the treasuries because just not enough time to do them, but they need to really be brought into the mix as well. But look here, as I mentioned, we've got a 5-wave structure up there. There's a couple of ways to actually count this particular structure up here, but whichever way you count it, it still comes out as a positive structure. And what we were talking about yesterday is we're talking about a high coming in, and that high we would capped it in at the 65, which is the 76.50. I know it's a bit weird, but I just call it the 65 number. And yeah, anyway, we're looking for an ABC correction across this level here. So now we can bring that into there, and that into there, and we can start looking at this situation in here. So not sure what's happened to my little A wave. That's it there. So we'll need to sort of have a bit of work at this. I don't know if we should get a decent size correction here. So, you know, it should be, if this is going to be, this could be the A, the B, and the C. This A, B, and C, but this is still too small, because what we're actually looking at here, we're looking at this trend here to be corrected. Do you know what I mean? It's all of that so that's just a little bit too small, isn't it? So we could look at it in terms of proportions and ratios. So 23% would be, you know, the smallest situation. The next one up is the 38.2%. So that would be sort of acceptable as a wave 2. But it can go right out to the 61.8%. But let's just sort of see how we go. If we're going to expect stock to push up, then we want to see this push down. Yep. And this is what we're seeing. So what I normally do with corrections is just allow the first leg to unfold here, and the first leg to see if it's in 3 waves or 5 waves, because if it's in 3 waves, then because there's about 11 or 12 different corrections, and that's debatable. But if this is in 3 waves here or 5 waves here, at least we can halve those 12 corrections into 6 of them. And then we can work with it from there and just eliminate them. So normally with corrections, for me anyway, I just like to allow the first one to unfold, check it out, see what it is, and pick up its little sort of DNA, its little sort of fingerprint, if you like, because each market's got those. And funny enough, we're looking at the Australian dollar in this here. So this picture, this is a 2-minute chart, I just like to do the robo on the 2-minute chart with the Australian dollar when it's running. It seems to do it quite well. 2-minute robo and using the levels as well. It's just what I do. It's easy to do it that way. Control the risk better. But this picture through here, this is a 5-wave structure through here. A little bit sort of debatable. This can be wave 1 here and wave 2 to here, but we want to see that the beginning of the trend, yeah, is wave 1, then the impulse wave here, the wave 3 is the longest and the strongest, and then we've got wave 5 here. So markets normally have about half a dozen of their own patterns that just reoccur in different sizes and are skewed by certain prices, as some prices carry more weight than others because of numbers, the way that people think, 1, 5 and 8 in that order are the strongest. So this whole picture here is really the same picture as this little tiny picture here in the first wave here. See this little picture here? So we've got down here for 1, back for 2, down for 3, and all this 4th wave down through here. So this is a micro picture of the first wave down, which is a picture of this whole thing coming down through here. So I feel that that's sort of, anyway, it's a bit interesting anyway. Okay, so look, we've got 5 waves down through here. We know that 105 is a strong number here. This is the first bounce here. We're looking for an A and a B and a C wave. Don't know how far this is going to come back, and this is a bit of a problem with the euro, but we can start to look at 5-wave structure coming up through here. And this move up through here in the Australian dollar, by the by, would be a lead-in for the ASX on the opening as well. And you can pick this thread up in New Zealand time when the day starts there as well. So bringing that right through there. So we're looking at we're looking at this A, B, C structure coming up through here. So bringing this back into the euro situation as well. So yesterday we were looking, well, we've been looking at this is a 4-hour chart here. I might just bring this on to a 2-minute chart here. So yesterday we were looking at the euro coming down through here, and we're looking at the 5 waves down. So it appears now that we can see that each trend has a beginning, a middle and an end, and we can see that it had its beginning here and then its middle here, which is the strongest, the wave 3, the wave 4 here. Wave 4s are complicated if wave 2 is simple, and it just becomes a bit clearer now. So we've got wave 5 down to here. So now we've got wave 5 down to here. Would be looking at those 5 waves to be wave 1, and then we're looking back for wave 2. Now we don't know if wave 2 is going to come back to 142 or 143 here. Okay, so that's a bit of a problem that we've got. There's a couple of ways to look at this situation. So I feel that this is a possible 5 waves down to this point here, and then we've got the A, the B, and we're looking for 5 waves up for wave C up to here. So that could certainly be the top there in terms of the 1, the 2, the 3, the A, the B, and the C for the 4th, and up for the 5th. So that can be the wave 2 there, okay? But the trouble with corrections is they can just expand on themselves. So this, what I mean by that is that this A, B, and C here can just become a bigger A wave here, so an A wave in brackets here, then we have a B wave, and then we have a C wave. So I just don't know at this stage what we've got here. I know the euro has shallow corrections. We just need to do a little bit more work with the other markets here. But we are looking for this wave 2 here, and once that's complete, we are looking for a stronger move to the downside. Now, as I mentioned in the early bird this morning, that you know, we're all different. We all trade different times frames. We all trade different systems and so forth. We know that as whatever system that you're running, we know that the levels as a backdrop works quite well. We also, the Elliott can be quite helpful at times. Corrections are their weakest point because they can just expand on themselves. The impulse waves themselves are the easiest to work with, and we're in a correction at the moment, a rally, and we just don't know the size of it just yet, so we just need to be a little bit sort of careful. But catching the third wave down would be nice, and I do find that the weekly, the daily, and the 4-hour robo method can be quite helpful once the market is running through here. So this is the 4-hour chart in the rally here. So we'll watch that. We'll watch the resistance points with all of that. You may have a couple of losing trades in here to get the wave 2 turn, but the wave 3 down should be worth it. And as you can see here, it might be a little bit sort of like finding this one here. We can see that it'll smooth down here, not a problem. It's okay through here. There's 1, 2, 3 losses in here. So you may have 2 or 3 losses in there. So you keep the position sizing small, and once it starts to run, then you can use the new lows here to add new positions into the market as it moves down through here. So you'd still be in the trade here, you'd still be in down here, and of course this is where the Elliott wave comes in, because you know, in the impulse wave we could see we knew that we're getting to a low down through here, so you can start, you know, taking the money off the table. We know this is a rally, we just don't know the Elliott structure of how far it's going to actually develop. But the robo method can help us find that sort of turning point, at least in terms of managing the money and being on the right side of the market at the right time. That's what it does. So keep position sizing really small. The weekly and the daily robo can be very helpful, and the 4-hour can be helpful as well. But don't overtrade. If you overtrade, then you're basically doomed. If you undertrade, then it's just a numbers game, and it becomes like washing the dishes. So just a chore that you need to do. Okay, that's about it. Like I mentioned, coming back here, just looking at say the Dow Jones and the S&P 500. Yes, the 12,000 is what we're looking for. We have seen one retest there. It does look weak, but at the same time, we've got this trend line of support coming through here in this situation here. So it's only logical to look for a bounce in this region here, and we're pretty much sort of there as it is. With our market, the XJO, we've seen that push through the 4,500 mark, and let's just bring that in there for a moment while we're here. Bear with me for a second. Right, so we've seen this push through the 4,500. That's good. It's on strong volume there, as you can see, which is good for the downside move here. We are at the old lows here. The Dow finishes on a positive note today, I think, and so you know, we could see a reversal like this here, just here. If we get a pattern like this here, so if we had, say if that was the 4,500 there, what we'd be looking for a bigger bearish picture is we would be looking for, yes, the market to move through here, then move back up and get locked under there, under the 4.5 here. That's what we're looking for here. If we get that, if we get that, then we can trade short again based on that. Now, we do see that any sort of good news that's coming into Australia is experienced in a rally, but it's short-lived. A small amount of bad news is hitting us pretty hard. So there is that selling pressure there, and we need to be aware of that. Yeah, a bit of a rock and a hard place. I think it's an area over this period of time that we don't have a lot of positions in the market. Just keep position sizing really small, and choose your markets carefully to trade on. The banks are under pressure. They're under the pressure in the US as well. The governments have clipped their earnings to 3.5% on costings. So that may show up at this end as well here. So look, anyway, the breakthrough is important, but the retest is more important. So let's just give this a bit of time to develop. At here, we know that this trend here coming down through here is oversold. And we just need to see how the 1272 on the S&P 500 holds up, the 12,000 on the Dow, and we also need to consider the copper situation, the base metals. Its little wave count that we talked about. So even though there's a bearish picture out there, there's also a positive short-term bounce still brewing in the background, in the shadows there. So that's what I'm concerned about. So jumping in to go short big time is not really the go until we see copper sort of lock under the 405, the 400, and the Dow really sort of find itself locked under that 12,000 as well. And also sort of broken that support line there, because, sorry to go back over this, but with support lines, if I can just do an example here, let's just say from here, right? Let's just say this situation here. What happens if this was the Dow Jones, and the Dow Jones is coming down to this support line here? What I'm concerned about is getting this sort of bounce back up through here. Yeah. That's what was sort of there. So I was worried about shorting to get caught here and then get that there, because that's the normal probability, and that's what we're trading, probabilities. So we're looking for that retest back up through here. Then if it does come through, then it comes through here, then it just does that again and retests the angle there. It's just the same as at the levels going across this way here, how it comes down, bounces, come through, then retest that there as well. It's the same going, slicing the cake, on the 45-degree angle here. It's the same scenario. So the Dow Jones on a daily is just in here, and I'm afraid that we may just get this and this, then this and then this. So, we want to get our timing right. So we're looking, at failing, on this point here. That's what we're sort of looking for there on the Dow Jones, essentially. Okay. Anyway, food for thought, and enjoy the weekend. And, like I mentioned in the early bird as well, how the Friday closing sits is kind of a reasonable probability how Monday will open up, because that's where the orders are sitting, so to speak. So it's, even if prices are up today, it's really about the volume as well. So in this case here, where we've got this strong volume coming to the downside here, if we see the price go up here but on lower volume, then we know it's weak. Okay, so just be aware of that situation. So a strong closing on strong volume is a positive thing. Higher prices on low volume is not a good thing. So sign of weakness. And the market can turn on that point there. And also get to the downside as well. If the market does go down, but it's on low volume, then it's telling you that no sellers are really there. So that's actually a bullish aspect. But this market moving down through here on strong volume here is a strong move. It's likely that because stops would have been taken out at 3 different levels here, then that would have been the reason for sharp moves there. Normally computer taking stops out. Okay, good morning and good luck.